today's class. Today's class, forget this name you are seeing here. It's very simple. How you can find stocks that fit the type of investor that you are. So, for example, if you are a newbie who is investing in stocks for the first time, or if you are experienced but you are passive or you are active, or if you're a trader, basically the type of stocks that fit you, right? Why does it matter? It matters because there is no one size fits all approach. You could go to a hospital and they'll recommend one specific drug. If someone else with exactly the same ailment or disease goes to the same hospital, they could recommend a different drug, or maybe the same drug but in different quantity. So that's how investment is. There's no one size fits all approach. Some people invest for dividends, some people invest for capital appreciation. Some people, while they investing, they are always scared that they will lose their money, as the case may be. Some persons can risk a lot of money without any form of fear whatsoever. So just because you see someone investing in a specific stock, it doesn't mean that that stock is suitable for you. So the purpose of this class is just to re-emphasize that you want to go for solid companies, number one. Then secondly, you want to go for companies that fit who you are as an investor. So once again, this session is proudly sponsored by Assessors Consultancy. You know our platform, the Assessors platform, where you can get, so that is that screenshot you see at the side is our app, which will soon be released to the public, right? You can do a lot of things by yourself, but if you want physical consultations, you can always reach out to Benita or myself. We are chartered advisors in the Nigerian market. Thank you. So that the table of contents, it's actually short. So the introduction you see here is only 1 point. Then we look at the different types of investors and the stocks that suits them. There are different, there are more that we could not consider, but we could list them while the class goes on. Then the conclusion is simply your questions, whether you have questions now or you submitted questions in the form. So like we always say, while this session is going on, if you have any questions, you can note them down, either drop them, etc. Then when the session is done, you can raise your hand, signify to ask by yourself, or someone else will read your question for you. However, if there is something very important that you need to say, so maybe the speaker, which is myself at this point, is saying something that does not sit well with you, you are permitted to turn on your mic or raise your hand, however you want to do it. Then say your mind. Thank you. We get started. Now, these are some of the questions that were submitted in the form. The reason why I put them here this time around is there is one question, this one at the second to last, this one here, why stocks without fundamentals are thriving in the Nigerian capital market? It is a very important question that I hope that we can discuss the answer first before we delve right into the session. The reason is that knowing the answer of this question is very fundamental as an investor. And considering that at the end of the class, we may end up skipping some questions that we feel have already been answered, I felt that it is very, very important that we answer these questions. Yeah, so the question, why stocks without fundamentals are thriving in the Nigerian capital market? Yeah, why stocks without fundamentals are thriving in the Nigerian capital market? Joshua, please confirm that you can still hear me.
Yeah, yes, I can still hear you.
Awesome. Thank you. So what we mean by stocks without fundamentals, when we say fundamental analysis for people who are brand new, so for those of us who are experienced, please permit the newbies because I made an announcement in the new investors group that this class is also suitable for them. So I may want to simplify some things more than how our prior classes have been going, right? So why, when we say fundamental analysis or fundamentally sound stocks, we are looking at companies that are, I don't want to say unshakable, but they are strong companies, they are large companies. So for example, in the telecom space, you have the strong players such as MTN, Airtel, Globacom, then you have Nine Mobile, then you have Spectranet. So as you can see, you cannot compare MTN and Spectranet, like they are not mates, as you can see. So in this context, MTN is the fundamentally sound one. Spectranet could also be fundamentally sound, but MTN is kind of better. So the question is, why stocks without fundamentals are thriving in the Nigerian capital market? There is this principle called the greater fool principle. Fool, Fool, where, for example, that's insult. Uh, so what is this greater fool principle? When you see that something is bad, let's just, no need for theories, let's just give the practical example. When all these MMM and all these Ponzi schemes come, when they are brand new, the people who invest in them, they know that this is bad, but they still want to invest. So they are willing to take that risk. Why? Because they know that they will be able to live before things go south. So the greater fool is simply the person who is under you or the person who is buying from you. That is your exit liquidity. In stock market, we call these people exit liquidity, right? So for example, there are some stocks, ASO Savings, okay, that one has been delisted, or FTN, Cocoa, etc. Some stocks that are not very fundamentally sound. However, the price action is still fine. So for example, if a stock was 2 naira, that stock becomes 4 naira in a few days. That is already 100% gain. But if a stock is 200 naira, it's not very easy for that stock to get the same 100% gain of becoming 400 naira in a few days as well. So as you can see, these very cheap stocks, they have the higher probability of having higher returns. So because of that, it doesn't matter if these very cheap stocks are fundamentally sound or not, people may still decide to buy them, hoping that when the price reaches, hello, all right, hoping that when the price reaches their expectations, maybe 100%, maybe 200%, or even 1000% profit, then they sell. Now, you as a new investor or someone who is just on their own trying to invest for the long term or however, you say that, oh, wow, in 1 year, this stock has given 500%. So, okay, fine, let me invest in it for the long term. Then when it's time for price correction or as the case may be, your portfolio ends up being the worst portfolio ever seen. Then you say that the devil has come again. So that's just it, the greater fool principle. When you buy stocks that are not fundamentally sound, you have to be ready to always watch the market so you know when to sell, right? But if you are a new investor, you don't need to necessarily know when to sell so long as you can get fundamentally sound companies. So the purpose of this class is for you to find fundamentally sound companies that are suitable for you. So we want to use the fundamentals as our foundation. What that means is that in the worst case scenario, I am assuming that, that is for the purpose of this class, we are assuming that we are not considering stocks that are not fundamentally sound because this class is actually looking for fundamentally sound companies that are suitable for you. Why it matters for you to search for fundamentally sound companies, right? So this is actually a practical session, but I'll just list them out. Lower risk of collapse. This one means that in a bear market, for example, investors are scared. They say, "Chai, stocks will go down." Oh. So the question now is that if, for example, Spectranet, I know that Spectranet has there is this measure, or yes, M&A currently going on between Spectranet and Legend Internet. Legend is publicly listed. So when I say Spectranet, very soon it will be Legend or whatever name they want to use that I'll be talking about. So, but just permits me to still use the term Spectranet for now. So if, for example, Spectranet was a publicly listed company and now investors are scared of a stock market collapse, between Spectranet and MTN, which one do you think investors will sell off the most? It is Spectranet. Right. I mean, considering what is going on presently, right? What about downside protection? Considering that it is Spectranet that investors will sell off the most, you see that MTN slightly protects you. Easier decision making. When a company is large, is fundamentally sound, you don't need to think, you don't need to be afraid when deciding to buy it or not. Dividend income. I always love using this example. Let's assume that you have a business and at the end of the year, your business made a profit of 100 million, right? But now you are expanding and your expansion needs around 200 million. Maybe you want to go to a different state, that is, you are growing to a new state or new country, as the case may be. Out of the 100 million that you got as profit, will you withdraw it and start spending it? Or will you reinvest that 100 million back into the expansion? Of course, the logical answer is to reinvest and look for more. So use this rationale. When a very large company or a company that is fundamentally sound, when they make profits, considering that they are already large, there is relatively nowhere they want to expand to anymore, then that company can pay dividends continuously. You can predict their dividend payments. So we have the likes of Coca-Cola, etc. Right? But for small companies, for example, you may not necessarily expect as much dividends. Why? Because this company still needs to expand. And while they expand and you invest in them, then it is capital appreciation. Your share price will increase. Do you understand? Yeah. Let's look at, please, if you aren't already, please look at my screen. Let's look at something, right? So we want to compare Presco and Ella Lakes for this demonstration example. This is Presco, Nigeria's, hope is still the largest agri stock by market capitalization. Excuse me, please. Let's check. Yeah, the industry is agricultural services. Yeah, Presco is still the largest, 2.3 trillion. Yeah, so we want to compare Presco and Ella Lake. So Presco, as we see, yes, fundamentally sound, right? Then let's search for Ella Lakes. Ella Lakes needs watching. It is not very sound like that. So let's try to compare. So compare with other assets. Presco. Right, so here we are. First of all, looking at their financials. In terms of revenue, Presco, while Ella Lakes is looking at less than around 150 million naira, Presco is looking at 331 billion. Do you know what is billion? 1 billion is 1,000 million. So just imagine the significant difference. Then in terms of profit margin, even net profit, Ella Lake still at loss, Presco making significant profits. Look at their assets. While Ella Lake is 31 billion, Presco is around 833 billion. So let's look at the investment performance of them, right? Looking at their effective yields, that is the rate of capital appreciation. If you have not checked the email, access was sent regarding effective yields. Please check, you see it's the definition and how we explained it well. Look at dividend yields. Presco, Ella Lakes has zero dividends, but Presco high. Risk exposure, they are somewhat the same. Yeah. So as we can see here, Presco in terms of performance will make a new investor to sleep well at night better than Ella Lakes. We can also prove this. Come to the technical analysis page. Please permit me to duplicate my screen for this example. Yeah, Joshua, please confirm that you can see two of this.
Yeah, I can see two of your screen.
Awesome, thank you. So this is the technical analysis page, right? In the technical analysis page, I'll come to asset versus index for both of them. The first one, I'll search for Presco. The second one, I'll search for Ella Lakes, right? So we can better do the analysis. Now, I'm not talking about your potential returns for now. Let's look at the risk, that is the likelihood of you losing your money, as the case may be, right? Looking at the assets was drawdown. So this was drawdown looked at within the last 1 year period, right? Please pay attention. Thank you. Within the last 1 year period, if we say the prices of these two assets is 1,000 naira each, between the both of them, which one dropped down significantly the most? For Presco, this first one is Presco. Look at it here, Presco. Starting on February 19th, 2026, though it is yet to recover, it lost around 26.53%, and the deepest point is on March 18. So this March 18, why it dipped, remember the wars, the profit taking, etc. It is yet to recover. However, for Ella Lakes, as we see, it dipped over 41.11%, starting on August 13, 2025, and the deepest point is February 24th, 2026. It is still yet to recover. The NGX All Share Index dipped 9.2%. Moving on to recovery speed. See, while Presco's, so what this recovery speed does is that it looks at the longest point it has taken a specific stock to recover from a dip, right? So the longest point for Presco, this dipping started on July 25th, 2025. Then it recovered on January 8th, 2026, 167 days. For Ella Lakes, it started on August 13th, 2025. It is yet to recover 222 days. So what we are seeing here is that if you are the one who invested in the both of them, and when you see that your money is reducing instead of increasing, so for example, your money was 1,000 naira, then it dipped to, for example, 600 naira. You want the money to become 1,000 naira again. You don't want it to be 900 and something. You don't want it to be 999. You want to see 1,000 naira for you to have sleep, for you to sleep well at night. You see that it is faster for Presco to recover than for Ella Lakes to recover. Let's see if we can look at the riskiness. So beta looks at riskiness, right? So this last one here, beta that you see here. If a company, if a stock has a beta of 1, it means that that stock is moving at the same risk as the entire market. So when you get the Nigerian All Share Index, or when all the stocks in the market on average, when they move up, the stock moves up. When they move down, the stock moves down. So the stock behaves similarly with the market. If the stock's beta is lower than that of the market, it means that the stock is less risky than the entire market. If the stock's beta is higher than that of the market, it means that the stock is more risky than the market. So what we are seeing here is that Presco is less riskier than Ella Lakes. I hope that we are following up to this point. What else? What else? What else should we look at again? All right, I think that we can call it. Okay, no, we can look at this last one as well. You know what? We can call it a day for now for this one. Let's continue. So you understand why fundamentals matter. When you invest in fundamentally sound companies, you can sleep well at night, even when there's a bear market. So investors are panicking and selling. You just check, how does this affect the company? If it will be a short-term effect, you can proceed to just continue your sleep or even buy more if you see that the stock is going down. But when you invest in a company that is not fundamentally sound and you see people selling, you want to know why they are selling, if it will be for the long term. In our last class that we did on portfolio rebalancing, I made mention of MTN. Remember at the time, MTN's price has not been going down. I think it was still high, around 700 in the upper range. The MTN fell to even 709. It fell low. What happened? This war, etc. It's increasing the price of, well, right? Increasing the price of oil. So while stocks like Aradel, Seplat, etc. should do well in this period, stocks that rely a lot on oil. So for us to have network now for this meeting, it means that a mask somewhere needs to be turned on. And for that mask to be turned on, a generator needs to power it. So as we see here, MTN, all these telecoms, they cannot necessarily do away with this war. They must be affected. So if MTN stock was not affected in this market, that is when you should even ask what is happening. So for the stock to come down is okay. It's just for you to know that this war won't last forever. So if, for example, you feel like the price has come down to the point that you can buy more, you can be free to buy more. It's totally up to you, not investment advice. So according to the type of investor that you are, let us search for suitable stocks for yourself, right? New investors, you are welcome to the market. You are welcome. It's a market where you will see both the good, the bad, and the ugly stocks. So the purpose of Access What here is to help you focus on the good ones, then do away with the bad and ugly, right? So for you as an investor, you should prioritize your safety more than your returns. For me, when I started investing, I mostly invested in bonds. As a matter of fact, one of the recent either rights issue or public offer that were announced, the money that I used to buy it for myself was one of the bonds that I did some years ago when they were returning the money back to me, right? So that is that money that I used. So when you are new, you want to care so much about preserving your capital, no need for you to take unnecessary risks, right? So you want to look at stocks with high market capitalization. So for example, MTN has the higher market cap than Legend, than Spectranet. Market cap is looking at, if a stock's price is 500 naira, how many units does that stock has, right? So how many shares does that company has? If, for example, the company has 10 million units, it will now be 10 million times 500. That is the market cap. So market cap is like how investors are valuing that company. So we are recommending that the market cap of companies that as a new investor you want to go for, if you are considering stocks, should be above 500 billion, revenue above 100 billion, etc. You don't have to stress yourself, right? You can actually do all this by yourself. Come to the fundamental analysis page on Access What, right? Select general markets. Now in this general market, you see a lot of things here. So this Access What screener, if you click on it, then just click on apply screener. You will see the stocks that are suitable for all, like they are fundamentally sound companies. We already have these ones based on some rules that we set. If you have access to your book, The Intelligent Investor by Benjamin Graham, right? Open to pages 184. You will see a template there that he set for passive or defensive investors. That template, this is it here, just select it. You'll see the stocks, Nigerian stocks. If you are interested in the US stocks, then select United States. You'll see the stocks that are suitable. So these are fundamentally sound US stocks, according to Benjamin Graham. You can always look at change, review the options. So revenue should be greater than 100 billion, total assets greater than 500 billion. You see the screeners there, right? But now you can also ask AI. So let's just say I am a new investor. I want companies that will pay me dividends and my money will still be safe, right? So I just say new anything. So what this does is that our AI will consider your inputs, what you have inputted. If you say you want stocks that will give you more than 50% per annum, as the case may be, the AI will consider your input, then it will generate a set of rules for you. You just have to apply those rules. If you apply the rules, you will see stocks that are suitable for you. So let's just first of all review the rules that the AI said. So the AI says that you should go for stocks that has a dividend yield between 2 to 8%. The net profit should be greater than 0%. In other words, the company should be profitable. The EPS greater than 0%, the profit margin between 5 to 10%. So let's see if some stocks are suitable for that. So as you can see, these are some stocks that the AI recommended. I clicked on apply screener. We could do the same thing for US based stocks, right? So then apply screener. Then you will see the US stocks that are suitable according to the AI, right? Yeah, so that is it. So let us use this one here. Market cap greater than 500%. How do we do this one? Select custom screener. So we want to be adding them one after the other. So market capitalization should be greater than 500,000 million billion. Add another one. The next one is revenue greater than 100 billion. So revenue is greater than 100,000 million billion. The next one is I'll jump net profits to profit margin greater than 10%, because if profit margin is greater than 0, it means that net profit must also be greater than 0. So profit margin, right, is greater than 10%. So profit margin is looking at if out of every 100 naira that the company makes in revenue, how much is remaining to the company, right? So we are looking at book value. Book value is looking at out of all the assets that the company has and not the liability. If you want to use all the assets to pay for the liabilities, what will be remaining? That is book value. If the book value is positive, it means that the company has more assets than liabilities. If the book value is negative, it means that the company is more indebted than has assets. So for a new investor, you want the book value to be greater than what? 0. So that is what I'll do. Comparison greater than, not greater than or equal to, but now just greater than 0, right? The debt to equity less than, okay, let's just keep down because of time. Dividend. The dividend yield is looking at if you invested 100 naira in a company today, how much will you receive in dividends annually? So let's just say greater than 1 for now, right? Then fetch assets that match this. So these are some, okay, this is still US, so permit me to go back to Nigeria. Yeah, so these are some companies that have been recommended. So see MTN, this is BUA Food, this is Dangote Cement, this is BUA Cement, this is Aradel, GTCO. So for those of us who are already experts in the market, we know that these are fundamentally sound companies. But for myself, if you are a new investor, surely you can go for any one of these ones here. But for myself, I will recommend that you add free floats. So free float is looking at out of all these shares of this company, how many are available for you to buy or sell? In Nigeria, some stocks do not have sufficient free float, right? So when you buy it, you may not see people to sell. When you want to buy, you may not see people to sell to you. When it's time to sell, you may not see people to buy from you, so you are stuck. So because of that one, let me add free float percentage. Then I'll just say it should be greater or equal to 15, right? Then fetch. So here we go. BUA Foods have left. So I can see some fundamentally sound companies. But now I can still see BUA Cement. So it failed this one. If I really want to remove all the companies that do not have up to 15%, then I simply need to say free float is required, right? Let me also make book value required. Then I fetch again. So here we go. See, no more BOS cement, as you can see here. So these are some fundamentally sound companies that me, personally, I can recommend to new investors. So yeah, basically. And if you're an expert here, you are seeing any name here that you want to oppose, you are free to oppose that name. So this is for new investors. We move on to passive investor. A passive investor it's like a new investor actually, but the purpose of being passive is that you do not really have the time to always want to check the market to know if well, that is why I says what is here for you though. But basically, anyone raising their hands? All right, no one. So a passive investor is somebody who wants to invest, want consistent income, but do not care too much about the noise and don't want to always check their portfolio. But at the same time, you want the assurance somehow that your income will continue and your portfolio won't go down significantly in bear markets. So as we can see here, the requirements of the passive is still somewhat similar. The market cap greater than 100,000, 500 billion, revenue greater than 100 billion, book value. The net profit should have been consistently increasing. The profit margin greater than 15, dividends is greater than 5. Then this beta, that is the riskiness as we discussed, less than 1.5. So for this screener that we just did for the new investor, you can always save it by yourself. So save it, say news whatsoever, then my screener for new investors. So what happens now is that you do not need to generate a screener by yourself every time. You simply come to show history inside the custom screener. You will see what you've done, right? So now let us do for what? Let's do for the passive investor. Market cap greater than 500 billion. Greater than or equal to 500,000 million billion. Revenue greater than 100 billion. Revenue greater than or equal to 100,000 million billion. What else? Book value greater than 0, right? So remember the purpose of this book value. We want the assets to be more than the liabilities, right? So yeah, so book value greater than, not greater or equal to, greater than 0. I put this one required, very important. Add requirements. I'll put profit margin greater than 15. Profit margin greater than or equal to 15. Dividend yield greater than 5%. So go to dividend yield. Comparison greater than or equal to 5%. Then what else? Beta less than 1.5. So I add it. Beta here. Less. So I instead of greater than or equal to, I now select less than or equal to then 1.5, right? I also make this better one to be required. Then I fetch. So here are some of the assets that have been recommended. So if you are experienced, you want to still check or confirm, are there any stocks here in this list that are not suitable for somebody who wants peace of mind? Zenith Bank, for example, I have a a friend of mine who she has invested in this bank for years, and she doesn't even know anything about stocks. It was the time when banks, those years ago when banks were looking for investors, she put a lot of money. And now, even till this year, you just wake up and you see an alert of 500,000, 600,000 in dividends. She actually invested a lot in this bank. I'm not selling it to you. I'm just using it as an example that these are some companies that truthfully you can invest in them, then forget about them. Not necessarily, okay, okay, so maybe this trans power, maybe what's looking into because of, see the issues we are facing now with regards to light. So if government really wants to fix this issue, Transpower, Gerego, etc. will be significantly affected. But so far, these are some companies that you can sleep well at night, knowing that you are kind of okay. For these banks, maybe due to the recapitalization, that is why you want to consider them. But you get the point. Thank you. For active investors, you are ready to look. As a matter of fact, you don't necessarily need this screener, right? I just put this one here for putting sake. You want to consistently look at the market to search for opportunities. So an opportunity that came out last year around November, December was when Presco announced not just for the rights issue, but also expansion in multiple countries, right? That was an opportunity. Something similar also happened this year with WAPCO, this Lafarge Cement, right? When they announced an expansion, I think in Ogun State, an active investor immediately sees that news, they will jump right in. Then when he sees that there is a news for something, this thing wants to lead to another problem, it quickly sells. So the difference between that, for me, right, my difference between active and passive investor is not necessarily that the companies are not fundamentally sound or are fundamentally sound. Remember, the foundation is that we're all looking at fundamentally sound companies. The difference is that a passive investor may just invest and just leave it there for years before they check, but active investors have more time to look at the market, to add more stocks to their portfolio, to remove some stocks from their portfolio, as the case may be. Yeah, so when you want to look at industries as an active investor, you want to look at the fast-moving industry or opportunistic industries. So looking at this war in Iran, we saw what happened to Aradel. We saw what happened to Seplat. We saw what happens to companies that if the price of oil should go up, it is net positive for them than net negative. Remember, it is net negative for MTN, but it is net positive for Aradel. Thank you. If you check our last class on how to rebalance a portfolio, if you remember, we use both MTN and Aradel in a portfolio. And we show how that portfolio, considering if the war in Iran, as the case may be, MTN price may go up, Aradel price may go, MTN price may go down, Aradel price may go up, then your portfolio is somewhere at the middle, if you remember that class. Yeah, so active investors they are kind of opportunistic. Sorry, before I forget, new investors look at safety. Passive investor look at stability and income. Active investor, you want to outperform the market. Now we're looking at ethical investors. These are investors, it could be you, who are investing based on some values that they have. Me personally, no matter what, I will not invest in any company that promotes gambling. I will not invest in any company that promotes wars, that creates weapons. And I will not invest in any company that promotes tobacco and any form of drug whatsoever. I'm not telling you that you should do that. So if you check Palantir in the US stock market, or even there is one Nigerian, I've forgotten the name of the Nigerian startup that has multiple rounds of investments. They are still involved in drones for wars, as the case may be. Now, that could be well suitable for you if you do not have such values. But me, I have such values, so I cannot invest in such a company. So an ethical investor will also look between these two companies. The both of them are okay, right? Which one treats their staffs well, or which one has more or better impact in their community, right? So it's something that I also do. So we were in a conference yesterday, right? And some persons who were looking for investors, not a public company, right? They do this black soldier fly larvae. So instead of poultry, fish farmers, etc., to buy very expensive feeds, you can buy their very cheap maggots and feed your fish or chickens with them. So the investors they are looking at that if you invest in them, then they can produce more maggots. Now, why that is important? What they feed, that why it's important to me? What they feed the maggots is food waste. So if that company expands, we'll have less food waste in our society. Then why it's also important to me is that our farmers do not need to buy foreign feeds as much anymore. So it's net positive for the country. So while I'm still making returns in terms of profits for that investment, I am having high impact in my country. So I could call myself an ethical investor if I decide to invest in this specific company for the reasons I just told you. Some investors are Sharia investors. These investors, they want to adhere to Islamic principle in terms of no gambling, no interest, etc. You can find such stocks on Access Words, right? Come to the recommendations page, select assets. That is the asset recommendations page, right? Come to yes, compliant investments, then Sharia compliant investments. You will see the different stocks that are Sharia compliant. You can always go to the next page. So if you are Sharia compliant, etc., these are some stocks that are worth considering. I think that there is an ETF, the Lotus Halal 15 ETF. You may consider this ETF if you don't care so much about liquidity. This ETF cares about, in 1 year, it has made 282%. So you can also look at this, there is this mutual fund. Come to research, select mutual funds, right? Then select Sharia compliant funds. These are some Sharia compliant mutual funds you can invest in: Lotus Halal, Stanbic IBC Imam, ARM Halal. So here you go. So if you are a Sharia compliant investor, there are so many forms of investments for you. So we have traders. So these are the investors that do not care about fundamentals. And this is where the greater fool principle, greater fool theory I told you of earlier, this is where it comes into play, right? They care much about the price movement of the stock. They don't necessarily care whether the company is the best company or not. If you want to be a trader, personally, I will not advise you to use the Nigerian stock market. Why? Because a day we have a limit of 10%. So a stock's price for now cannot exceed 10% or go below 10%. You do not, I don't think we have brokers now that that can give you leverage to say out of your every 1 naira you put, we'll match it with times 10 with times 100 for you to make more. So if you truly are a trader and you are experienced, why not consider crypto, the US stock market, etc., other markets that are well advanced? Nonetheless, if you want to learn more about trading, that is technical analysis, as the case may be, you can also use Access Words, right? So when you select a specific, search for any specific stock whatsoever, instead of this price you see here, you can select show technical view. You'll see some technicals, right? You can play with the different tools. You can also come to the technical analysis page that you see here. So this general market, if you select monthly winners or losers, these are some stocks that in the month of March, they have consistently done well. So let's use, for example, custodian, for example. So scroll down, look at the month of March, select it. It is only in 2022 that this stock made a loss. 2023, 24, 25, 26, this month, so this stock so far has done well. So if you are looking for capital appreciation, just come to this technical analysis page in general market, select monthly winners or losers, then search for the stock. So we're approaching April, so select April. You will see the stocks that have relatively done well in the month of April. Then you want to look at them specifically to see. So look at, this is Nigerian Aviation Handling Company. It has continuously done well in the month of April, right? You could use all these ones or use the technical tools, or you could follow the, crypto Senko, the Senk on Twitter is very good on technicals, and some other people on Twitter are doing well when it comes to technicals. Thank you. Like I said, the class will not be very long. So once again, you can use the Access What platform, right, for yourself to make your research, etc. However, if you want physical consultations, you can contact either Benita or myself. We are chatted and we can give you the necessary advice that you need. Thank you. Any questions or comments? So Joshua, over to you.
Thank you so much, Rona. Thank you so much. That was very insightful. Do we have any question or anybody that has question before we move to the questions on the Google Meets Google form that was sent? Please, Rona, you can also like display the questions too. Okay, in the absence of any question, we'll start with the first question, which says, what do you do when any of your stock have run 150 to 200%? Take profit and invest in other opportunities or keep holding?
Yeah, that's a good question. And I must refer back to what I mentioned earlier when this class started. There is no one size fits all approach when it comes to investing, right? So if you are a long-term investor, for some long-term investors, even some people you see on Twitter today, some people bought Nigeria Aviation Handling Company, some people bought Presco at 19 naira, some people bought NACO at less than 10 naira. So that stock, they are still holding it and they have made over 1000% in it. The reason why they are still holding it is simply because the company is fundamentally sound and it is in their long-term portfolio. Some persons who their investment duration is quite short, or for the active investors that are quite opportunistic, this is where they will now maybe look for other opportunities or take profit, as the case may be. So it depends on you as an investor. If you are a long-term investor looking for retirement, etc., then there really is no reason for you to be taking profit and looking for some, so long as the company is still fundamentally sound. However, if once in a while you want to rebalance your portfolio, then you decide to take some profits, it's still not bad. So yeah, there is no one answer. It depends on who you are as an investor.
Okay, thank you so much. The next question says, a 55-year-old investor with 20 million naira wants to run two separate portfolios, one aggressive and one conservative. So I think the person is asking for an advice
Yeah,
on this. Yeah.
yeah. So this person is 55 years old. So I don't know if everyone will agree with me that the person is quite aged. So basically the person is not as young as I am. There's significant difference between my age and that person's age. Therefore, while me as a young investor, I can take risk. I can decide to invest in very risky securities, very risky stocks. The simple reason is that even if I lose the money, I still have years ahead of me for me to recover. But what if you are 55 years old, for example, then you decide to invest in maybe even MTN is a fundamentally sound company, right? So you invest in MTN, right? But now this war has broken up, has started. Now MTN's price is down, Presco price is down. But now during this war is when you need the money for an emergency. So maybe hospital bills or something comes up. As you can see, there is a problem because when you are old, you surely have such emergency needs. So what happens is that, yeah, it's still okay for you to have an aggressive portfolio, but you want to allocate more of your money into the conservative one. Look at money markets and other mutual funds. Look at stocks that have very low downside exposure, that is risk exposure, etc. But allocate more of your money to the conservative portfolio. When you are young, you can allocate more of your money to an aggressive portfolio. But as you get old, reallocate to become more conservative. Thank you.
Thank you so much. Thank you. Thank you so much for that question. The next question says, do you have templates that can help with screening stocks and doing research?
Yeah, so those are the templates that we showed you during the class. So just visit the fundamental analysis page, right? Select general market, then you can choose a template. So you can choose Benjamin Graham's passive investor. So these are some Nigerian stocks. You can select Warren Buffett screener. You can select fundamentally strong and cheap stocks. So these are some different templates that you can look. If you want to really see the rules, select review or change options. So you'll see the different rules that we applied to get that. Thank you.
Okay, thank you so much. The next question says, I want to know how portfolio works and how to create one.
A portfolio is a group of assets that you have. So if you have MTN, you have Presco, you have GTCO, then it is a portfolio. On Access What, right? For us to help you track your portfolio, simply click on this page, then add remove assets. You select the portfolio you want to add the assets to, then you add it. Why is this important? We do not just help you track your assets in the Access What portfolio page to show you all the metrics that you need. We give you some fundamentally sound advice as well. So for example, for this specific portfolio, we tell you that you have a good mix of industries. We tell you the portfolio is performing better than the usual, but we say the risk is too much. You can also visit this portfolio utilities page, right? If you have a stock, so for example, CMRF for Access Corp and Zenith Bank. So if stocks in your portfolio have some regulatory issues, you will see them in the portfolio utilities page. You can use our AI to analyze your portfolio. So for the purpose of this demonstration, let's just look at the history. The AI will tell you everything you need to know about your portfolio, from risk to diversification to dividends. It will look at all the assets individually and tell you which one is doing well. It will show you the problem assets, the high potential assets, whether your portfolio is diverse or not. So these are different tools we have in the portfolio utilities page. You can even analyze each asset individually. So for example, select Nigeria Aviation Handling Company, right? Then analyze it. So as we can see, this asset is doing better than the portfolio. You can look at the different reasons why it is okay or not. Let me look for my favorite stock, Access Bank. Yes, then analyze. So as you can see, Access Bank is currently drawing this portfolio very, very down. So as we see, we'll look at the different reasons. While the entire portfolio capital appreciated by 51.51%, Access Corp increased by only 4%. The dividend yield of the Access Corp in the portfolio, that is how much I have received so far, 0%. But for the entire portfolio, 1.95%. So as we can see, these are some different reasons for us to see the Access Bank is riskier than the entire portfolio. So you will see stocks individually, how they affect your portfolio. Now I can decide to compare this my portfolio with the NGX All Share Index to see if my portfolio is beating the market or not. And so far, the portfolio is beating the market. I can also decide to set an alert. So if I say I want to set an alert when my portfolio is now worth 500,000, or when my portfolio has increased to 150% or decreased to -1%, I can set that alert. So you track your portfolio on access what so you can have access to these different utilities. Thank you, Joshua.
Okay, thank you so much. Thank you so much. The next question says, how can I transfer my shares from a frustrating stockbroker to another?
Reach out to the other stockbroker you want to transfer your shares to. Then they will guide you on what to do. Sorry, please check if someone raised their hand or something.
Yeah, Olumba, you can
Yes.
unmute and Mr.
Okay. Yes.
Olumba.
Good afternoon. Thank you for the um what you've been doing so far. So I heard something about tracking your portfolio to see if you're beating the index, the ASI or share index or not. So what happens? Maybe every month you add new funds to your maybe winning positions or maybe losing positions. I noticed that once you do that, your ROI reduces. So if your return on investment, overall return on investment reduces, how are you going to track it against
Thank
the
you.
ASI? Yes, thank you.
Thank you. So AccessWorks does not use your return on investment. AccessWorks uses the performance. Let me show you what I'm talking about. So look at this portfolio worth periodic growth, right? So this is the worth of the portfolio. So it's say for the last day, the portfolio's worth. What was the last one? That is from 393,000, it reached to 386,000, for example, right? So it's reduced by this specific amount, right? So what happens if I should add an amount? So let's say I add 100,000, it means that the worth of the portfolio has increased. By so doing, the worth here will increase. But as an investor, I really do not care about the worth. I want to care about the performance. So see this worth here, I click on it and I select performance. So now this is where you will now see the real performance. How does it work? If your portfolio was worth 300,000, you add 100,000 and it is now worth 400,000. This performance does not look at that extra 100,000. It simply look at all the stocks that you had in the portfolio when it was 300,000. What was their performance in the next day? Did they increase by 1% or did they decrease by 1%? The new stock that you added, or whether you added value to the new stock, as the case may be, did it increase or did it decrease in performance? That is not this thing. So coming to these portfolio utilities, right? Compare your portfolio with an index. So I compare it with, you can use S&P 500 if you use US stocks, but since the stocks in the portfolio are Nigerian, compare with the NGX All Share Index. Now, I do not want to look at all these cards going one by one. Let's just go straight down to the statistics, right? So yes, you will see the total return, you will see the analyzed return, you will see the the average return, you will see the geometric average return, you will see the volatility, you will see the downside risk. So it's actually the performance that we look. If you are in our community, for example, you must have seen when I tell you how mutual funds work. They start with 100 naira per unit. What drives the mutual funds price to 101 naira? If all the stocks that this equity funds, if on average they increase by 1%, then the price of the mutual funds become 101 naira. If they increase by 10%, then from 100 naira, the price of the mutual funds become 110%. So it doesn't matter if the funds manager adds 1 billion into that mutual fund. What determines the price of that mutual fund is the performance. Likewise, the NGX All Share Index. What determines whether the NGX All Share Index will increase? Yes, it can increase in terms of market capitalization. That is the, is it know how many $1 trillion that Tinubu is aiming? But the real value is that 180,000, 200,000 that you see people always talking about. That is where we look at performance. Likewise, when assess what is comparing your portfolio with the market, it is not using the value of the portfolio, it uses the performance. I don't know if that makes sense.
Yeah.
All right.
Okay, Mr. Olumba, I hope your question have been answered. Okay, let's move on. Uh, Short talk on technical analysis, and I know you've
Yeah,
done
we've
done
done that
that.
one. We've done that.
What stock can 10x in the next 5 years?
I don't really think that. Of course, it's not necessarily impossible. I'm not answering that question just to let you know. But if you really want to check, so let's check. Let's look at past data, for example. I'm not recommending GTCO, please. How much you would have made. So the person says 5 years, right?
Yeah, five
So
years.
let's see. 1, 2, 3, 4, 5. We are in the month of March. So yeah. So this is 5 years ago. Yeah. So let's assume that I invested 1,000 naira in GTCO 5 years ago. The 1,000 naira that I would have invested in GTCO 5 years ago, so they will be around
3,000.
3,000 in price appreciation, then around 550 something naira in dividend. Okay, it's not 10x, but something. There are so many stocks that have done 10x, but as an investor, you don't really want to ask such a question publicly, right? Look for fundamentally sound companies. And presently, the way Nigeria is, our economy was terrible, then it became quite stable. If not for this war that is going on, it would have been quite stable. So now, if you actually invest in a fundamentally sound company, with the expansions going up, you may just get as much. So let's look at MTN, for example. Fundamentally sound, the price is even dipping now, but their Fiber X installation is still going on. Mask wise, the entire country is not covered. So if MTN continues to expand to the entire country, then their Fiber X, they take it more seriously. As you can see, the growth potential is still there. Likewise, Presco, growth potential, WAPCO, growth potential. So invest in fundamentally sound companies. Then in 5 years, you will surely see significant returns, but I will not promise you 10x. Thank you.
How how to read a financial statement and value stock? How do I read a financial statement and value a stock?
Awesome. So you can check our YouTube channel, right? We have the course that we've put on there on how to read financial statements. We also have a course we put on there on how to value a stock. Nonetheless, for simple showcasing, when you search for any specific stock, so NACO, for example, I search for NACO, I can click on quick options, then say view financial trends, right? It's very simple. The assessor can help you check if the performance is okay or not. It will show you different things worth considering or not. Likewise, if you compare a stock if you analyze a stock with AI, so in quick options, sorry, with this, should I buy this stock? Simply ask AI. But because of time, let's just look at our history, right? So in analyze assets, view history, check MTN, right? You can always come to valuation. The AI helps value it for you. So these are different ways you can actually value stuff. Thank you.
Okay, thank you. How do I evaluate stocks before deciding to invest in them? I think that's
And
still
that is what our class has discussed. Thank you.
how can I find profitable stocks based on PE ratio, debt equity ratio, and book value?
Awesome. So PE ratio measures how expensive a stock is. So prior to this war, our market has been in the bullish side, right? So you see stocks usually with PE around less than 10, having a PE of greater than 15, etc. So let me just give like a general, like I've always told you, there is no one size fits all approach. But for the purpose of this, and for the purpose of this question, let me just generalize, right? PE less than or equal to 15. debt to equity ratio less than or equal to debt to equity, okay, less than or equal to 1.2, book value greater than 0, you should get some things. Let's look for such stock if such stocks exist. Fundamental analysis, general, custom screener. So PE, price to earnings ratio. I'll put all of them as requires. So we say less than or equal to 15. Then I add another one, the debt to equity ratio. I would say less than or equal to 1.2. Then I want you to see the type of stocks that will come out. Then book value. Where is here? I can find book value. Sorry. Okay, book value is even up here. I thought I saw book value just now. Yeah, book value is greater than 0, right? Still required. All required, then fetch. So these are some stocks. Some are fundamentally sound. Some are stocks that I will not want to invest in. So those 3 metrics that you considered, they are not sufficient. Because yeah, while I can see some fundamentally sound companies, I still see some companies that may not be necessarily very suitable for me. So yeah, thank you, Joshua.
Okay, thank you so much. The next question here goes, how can I project a stock performance short term, mid term, and probably long term?
For long term, you want to look at fundamental. For mid and long term, you want to look at fundamentally sound companies, right? For short term, you want to follow the news. So when you hear a news, for example, that this stock is doing so, this stock is doing so, then that may be a good time. For the short term, you just enter, you get what you want to get, then you leave, right? So yeah, basically, for short term as well, you want to consider technical analysis. Technical analysis is very good for short term, short to mid term. But when it comes to mid to long term, always rely on fundamental analysis. And based on the metrics that we've considered in this class, that is fundamental analysis, you can use all these metrics for mid to long term. Then for short term, you want to use technical analysis or follow the news as the case may be. Yes.
Okay, thank you so much. The next question says, PZ wanted to leave Nigerian market some time ago. What would have happened to shareholders' money if they actually left?
They would have communicated to the shareholders. So, for example, how are they leaving? Is it someone else wants to acquire them, or when they say they are leaving, what necessarily does it mean? So, yes, both the government, the shareholder, everybody would have been well carried along. So, for example, if it's an acquisition, then you may get shares of the new company, or you may be compensated, right? That is financially. Or let's say they want to move the stock from the Nigerian Stock Exchange to go private, or maybe the NASD. In other words, you may decide to sell off, as the case may be. Nonetheless, they won't just wake up one morning and say they want to leave. There will surely be a meeting, shareholders meeting, AGM, etc., for everybody to be well aware of what is happening. Thank you.
Okay, thank you so much. The next one says, how can someone detect a good entry position for a blue chip stock?
For blue chip stock, these are very sound, fundamentally companies that are also large cap, doing well. If you, like we rightly mentioned, for long-term investors, you don't necessarily care about entry position, right? You may, if you feel like the price is too high, you may decide to, if you have, for example, 100K or 1 million, divide it into 10 or into 5, then be investing weekly or monthly to help average down your price. So if the price goes down, you buy at a low price. If the price goes up, you buy at a high price. However, for an active investor, you want to make use of technicals or consider the market. See now, MTN price down, Presto down. So this may be the good time if you, but yes, consider technicals. And we have technicals in Access Sports platform, so you can check the technical analysis. Thank you.
Thank you so much. The next is it advisable to borrow money to invest?
No, it's not advisable.
Okay. The next
No.
question says, how do you manage a portfolio during bear season?
So during bear season, this is when you want to check your portfolio. This bear season, now if there's bear season whatsoever, it's mostly cost. Number one, there is a war going on. Then secondly, Q1 will soon end. Q2 is coming. So this is usually the period where the first profit takers in the year want to take profits. So these are two major reasons why the price of stocks may go down. So how does this affect your portfolio? How many percentage decrease did you see in your portfolio? If it goes down, let's check. Sorry, permit me, please. Coming to the portfolio utilities page, right? Compare your portfolio with the index, this stock, right? Permit me, I'm trying to check for something. So look at this portfolio. While the entire market is 9.2%, it started drawing down in October 24th, 2025. Then it recovered in January 2nd, 2026. This portfolio started drawing down in October 13, 2025, then recovered in January 15, 2026. So if, for example, in October 13, 2025, this portfolio was worth 100,000 naira, it means that as of November 11, 2025, the portfolio would have been worth around 85,000 naira. Now, how will I feel if my 100,000 is 85,000? But if I had invested in the entire market, that is a mutual fund, my portfolio would be worth around 91,000 instead of 85,000. So you want to check how bear markets affect your portfolio. Also, looking at recovery, the portfolio uses around 145 days to recover, while the market uses 70 days. So you want to look at the impact of bear markets in the portfolio. If it is something that you can manage, so as you can see, me personally, I can manage 15% loss, right? 145 days, okay, is still somewhat fine for me. But if 15%, you can no longer sleep at night, you want it minimum 95,000, minimum 95,000, then you want to check the stocks in that portfolio that went down. Those are the stocks that were mostly affected because of the war. Those are the stocks that were mostly affected because of the profit taking. Those are the stocks that were mostly affected because of whatever negative impact is happening to them. So you want to reconsider these stocks that are making me not to sleep well at night. Should I continue or not? Once again, if you've not read our email, the email we sent you about effective yields and about risk exposure, please check them out. They are important because these emails actually help you understand what these metrics mean and how they help you. So for example, when you search for GTCO, then you see this effective yield by 29.77%. That is capital appreciation. Dividend yield of 11%. Then risk exposure of 41%. What do these mean? Check the emails Access what sent you. You will see them. If you don't see them in your inbox, check promotion or spam. Then please help us move them into the main inbox. Thank you. Joshua.
Okay, thank you. The next question says, what should I look out for in the company's balance sheet in order to invest in the company?
The company's balance sheet shows you what the company has. So you're looking at assets such as cash, such as both the current and non-current assets. You're looking at liabilities such as the loans, you're also looking at equity, such as retained earnings, such as share capital. So basically, for brand new investors, you simply want to look if total assets are higher than total liabilities, then between the liabilities and the equity, which one is higher? Basically, yeah. You can also check our course on how to raise financial statements. It's in our YouTube page. This class will also be shared on the YouTube. Thank you.
Thank you. The next question says, I just want to know how to rebalance my portfolio.
Thank you. So our last class was on portfolio rebalancing. So you can check our YouTube for that one. It's there. Thank you.
The next question says, if you invest before understanding an investment, understanding what investment is, and the company you invested in is not doing well, what should I do, or how should I go about it?
Thankfully, with this session, you can now know whether a company is fundamentally sound or not. So this is, for example, is GTCO. See the fundamental bar, it is green. Search for NACO. See the fundamental bar, it is green. Search for Presco. See the fundamental bar, it is green. Now search for Ella Lakes. See the fundamental bar. Let's search for maybe FTN Cocoa. See the fundamental bar. Let's see what John Holt says. See the fundamental bar. So that company now you want to check. You can also click on visit fundamentals. You can either use our access what template, or you may decide to use Benjamin Graham's template to see if the company is suitable or not. Do that. First of all, ascertain if the company is fundamentally sound. If so, then you may decide this is actually a buying opportunity for you to add more. If the company is not fundamentally sound, you want to reconsider your position in the company. Thank you.
Thank you. The next question says, to understand properly where to invest, given the high price of stock at the moment.
So not all stocks price are high. So for example, Aradel went up, MTN it went up, came down, Fresco went up, came down. So it's not all of them, right? So you want to look at the ones that the prices have come down. But if you're a long-term investor, you may want to split your money. Then you could use some parts to buy even those prices that went up. Thank you.
Thank you. The next is why stocks without
We've answered this one.
Okay.
We've answered this one.
The next question says, which is the last, why is Zikris PLC rising after bonus qualification dates? Can I still buy?
This Abi is Zikis. I don't think the qualification date has passed. So let's check the dividend corner to see if it has passed or not. Oh, it has passed. Oh, wow. Yeah, it has passed. So the thing about this company is that, so for now, the share is not readily available. So assume that you have one, it's not even up to 1 billion. Okay, it's now that it's even 1.2 billion because before it was 600 million. Let's compare the assets, right? View more. The shares outstanding, 1.2 billion units of shares outstanding. So which is 13 naira. So the entire market cap is 16 billion. So assume that you have 16 billion naira worth of this share in your portfolio. All you have to be doing every day is that today you sell 100 units at 10%, which is greater than yesterday's price. Tomorrow you sell 100,000 units at a price which is 10% greater than today's price. So that is something that may be happening to this stock, and this is why the stock's price is just going up. A stock that listed at below 1.8 naira is now around how much? So yeah, these are some things to consider. Yeah.
Yes, I think that is it. But would entertain any other question. If there are other questions too, you can just raise up your hands. Let me check the charts. Okay.
Yeah, no questions.
Okay. So I'm seeing a question here. It says, you how can I use access word to determine on undervalued stock?
All right, thank you. So there are many ways to determine the undervalued stock. You can look at book value. You could look at the dividend discount model. You could look at the free cash flow model. Different ways, basically. So for book value, in this recommendation, select assets, right? Inside company fundamentals, you say undervalued based on book value. These are some stocks that based on their book value, their price is actually low, right? When it's based on the dividend discount, you come to investment performance, then you say undervalued asset based on dividend payments. You see them here. So for example, this GTCO, just let's search for GTCO, view asset, right? Then you select view advanced statistics. So this dividend, according to the dividend discount model, this stock, if it is worth around 496 naira, it is still fair. But currently the price is 161 naira. So this price is still low, right? So as you can see, there are only two stocks. Sometime last year, Fidelity was there, but yeah, we all know what happened to Fidelity. So this is for the dividend discount model, right? What else? For you to check if it's undervalued or not, you can also analyze with AI. So mind you, I just analyze GTCO with AI, then come to valuation. With PA around 6.4 and PB around 1.2, GTCO looks modestly valued to cheap for its 18 soft ROI and dividend yield. If earnings are stable, you may be getting growth and income at a discount. So it is saying that GTCO is still fairly valued, not overvalued yet. So these are different ways you can use access codes to check if a company is undervalued or not. Yeah.
Okay, so thank you so much. Ifeoluwa Ajayi, I think I would like to touch on your questions a little. So on your question a little, you did say, to be candid, your website is very nice, but can you give a discount for subscribers? And if you check well in the Access Words portal, in the Access Words page, you would see that we have different pricing, and those different pricing models are there so that we can be able to accommodate everybody, new, existing investors, because we understand that new investors are just coming into the market with less knowledge. They want to learn more, and also, in as much as they want to learn more, they want to also get real-time good data that would help them invest. So we also have like a pay-as-you-go model, and we have a pricing model, and we also have a subscription-based model, thereby giving you flexibility to make a choice on what's best for you. And like they would say with stocks, I think our price is very much undervalued. I would use that word, like
Yeah.
our price is very much undervalued based on the value we are giving with access word. So you can just go with what suits you, what works best for you, pay as you go, then you can switch up as time goes on. And also, to also help you with the subscription, we also have a referral program where you can decide to say, okay, access what is of value to me. Since it's of value to me, I would use the referrals program to offset the my own subscription. So you can refer people and earn from it, and thereby use it to get your yearly subscription or your monthly subscription as you deem fit. So you can get a 10% of anybody you refer. You can get a 10% of that payment. You can just go read the terms of our referral to see how we also get to think about you to make sure that it's flexible for you to get to subscribe to access what and get the value from it. And also there are other questions centered around our app. So currently our app is in for internal testing, and soon we'll roll it out to the public. So very soon we'll be rolling it out to the public.
Yeah, thank you. Just to add to what you've said. So the referral stuff, Whenever you refer someone, the very first payment the person makes is 10%, but that's not all. Within a year, if the person continues to buy anything or subscribe or whatsoever, more features are coming. You will get 5%. Then within 3 years, you still get 2%. So you actually get more. Then when it comes to subscription, maybe we could increase, we could have a discount. So if you're interested in giving a grant to a lot of investors, as the case may be, you know, the Access What, we are new, brand new, startup. Yeah, we are brand new. So we have to survive. All these data sources that you see, the analysis, the data, the AI, they're actually a whole lot. And we are brand new, a brand new company. So it's not very easy on our part. So that's actually the reason for the pricing, which is still significantly cheaper than, for example, TradingView. And now Access What has more features than TradingView. So yeah, thank you, Joshua.
Okay, thank you so much. Thank you so much, everyone, for being here. And Access What is uh, trying to make your investment journey easy for you and would continue doing that. And would also want you to put the word out there. If Access What have been of value to you, you wouldn't want to gatekeep. You would also want to put it out there so that we can have a bigger community of investors where we can share insights, meet new people, like minds and everything. So thank you so much. I think that's the end for today. Thank you.
Thank you so much, everyone, and take care. Bye.